Good afternoon, George Cavaligos for HFT Bonds and Notes. We got that new low trade and reversal that I thought might be lurking out there. I know I've been harping on that the last couple days, but we needed to do something like that to get this kind of mojo broken where we were sitting in that little range. Problem was the 10-year didn't take out the old lows at 131.16. 10-year went down to 131.16 and a half. More consolidation type trades. As an Elliott Wave guy and somebody that looks at these two markets together quite often, the bonds and the notes, bonds made a slightly lower low and then came back into the range. Irregular B wave, or was that 5? I don't know. Either way, we're looking for some upside move here. We have daily bullish reversals in both bonds and notes. Not the big reversal, not the outside key reversal. We got close, but the market stopped up against yesterday's highs and turned around there and then is going choppy on us up here. I still want to try and buy a dip tomorrow. Just not sure where that dip's going to be. The latter part of the day today got a little choppy up here. You know, we're still sitting up near the highs, so I think you want to be a buyer. I just don't have a good spot to initiate right now. I'm hoping we can call this little corrective move up here 2/3 of the way over, and we're going to get another dip, you know, back towards these sort of late afternoon lows at, what was it, 131.28 and 144 even in the bonds and notes. So we'll see. Try to buy that dip, but then, you know, tomorrow morning, Chairman Bernanke, all bets are off. Maybe buy, you know, some cheap strangles. Play for a breakout of this range. Chairman Bernanke's been good for those types of trades. You know, the Fed talk that we saw today from Bullard was surprisingly dovish. The stuff from Dudley was, you know, mostly about Europe. I don't know what he's got to say to the Europeans, you know, pointing to how well QE has worked here in the States, I guess. And look, even Japan's doing it now. Maybe you guys should start it too, or do more, since they're already doing some type of QE, I guess, over there. But friendly by dips, I think, is my favorite trade. Market isn't out of the woods yet by any means. You know, we didn't take out the highs from yesterday. We didn't take out the highs from late last week. And I'm sort of nervous because the last time we got one of these daily reversals, we saw a retest of the high. I think it was Thursday night, Friday morning, and we put up that double top, and then the thing crumbled again. So stay nimble, stay flexible, stay on your toes. You know, if you saw me yesterday, you know, I highlighted the Wall Street Journal buying on strength of a couple bond funds, and that played out. Well, today, some big guys are buying the GLD. They're also buying some other natural resource and energy stocks. Oxy, I think, was in the top of the list. GLD was the top with a big buying on weakness number there. So I think we want to lean towards maybe looking at gold and silver tonight and see if we can reverse some of this little weakness that we've seen today after the big rally yesterday. Okay, not much. Let's wait and see what Chairman Bernanke says. I don't think it's going to be a game changer. I don't think they're going to stop QE. You know, everything's fine. Look, stocks are rallying. Gold's weak. Dollar's strong. Everything's fine. Don't worry. Don't worry. Okay. Have your stops in. Make sure you always trade with stops. Keep them nice and tight. I'll see you guys tomorrow morning in the email in the chat room. Have a great night.